Mortgage financing can be stressful, but it doesn't need to be. It comes down to two components: the lender you're working with, the loan originator, their experience, how well they prepare you for the transaction, how well they structure your financing. The other big component is you, the borrower. So here's a quick list of best practices if you're buying or refinancing. First, accuracy is everything when it comes to your application. Make sure your vitals, your full name, your date of birth, your social are correct in that application, your address history, your employment history. The other matter with your loan application is that not all of your monthly obligations will appear on credit. Example, alimony, child support, tax lien or tax installment payments. Or if you just recently purchased a new car or truck and your credit hasn't updated, so you have to review that application and make sure it is all correct. So from the onset, we have an accurate debt ratio. As related to disclosures, you'll receive disclosures throughout your transaction. It'll be the initial disclosure packet with that application, the loan estimate, the intent to proceed, the federal and state documents that you need to sign. Make sure you're signing documents as they're received. You can save a copy to your desktop. If you have questions about anything, ask your loan originator. As far as documentation goes, with income, with assets, best to send PDF versions. We receive many types of documents throughout transaction, and sometimes we can't even open them or can't read them. Sometimes taking pictures with your phone isn't going to work so well. So best to save as a PDF with your scanner, or even printing as a PDF. You should have a PDF printer. Under your printer options, make sure you check off headers and footers so the URL code is printed at the bottom, makes it an official copy. As far as income docs go, most recent is most important. Most recent pay stubs for 30 days, most recent W-2 forms. If you have any type of bonus or commission or overtime income, it would be best to pull your year-end pay stubs for the two most recent years so that income can be averaged. That's what we're required to do when using those additional forms of income. If you receive 1099s, we need those. If you are self-employed, retired, or have rental property, you need to send in your federal tax returns. All pages, all schedules. If you owe money on taxes, you need to show proof taxes have been paid. If they haven't been paid, you need to show proof you've set up a payment plan. And if you will not be able to file your most recent taxes by the due date in mid-April, you need to show proof that you have filed for an extension. As far as assets, again, two most recent months, most recent quarter. Make sure it's consecutive months. Don't send in, say, your January statement and then your March statement and you're missing February. There's a gap in time. All pages of the statement, please do not cross out, white out, black out any portion of your statement. We need to see it all. You have to even send in the blank pages of your statement. Often you have a bank statement that has 6 pages and borrowers always send in 4. Well, the other 2 were blank. I didn't think you need those. No, we need those. So we don't have to ask again and bother you. So send in the complete statements. If you're transferring money from one account to another, send in those statements as well. If you're receiving gift funds, typically you need a signed gift letter by all parties, the donor's bank statement, and proof you received the funds or the title companies received the funds from the donor. If you have any credit inquiries, when we initially pull credit, we might see inquiries there, and the new accounts, if any were open, may not appear on credit just yet. So you have to provide statements for those accounts, how much you owe, who you owe the money to, how much you need to pay each month has to be included into the debt ratio. If you are already under application, if you're under contract to purchase, please do not open any new credit. I don't care how much you love that new car or truck you just drove by. It's one of a kind. You've been waiting for that to come out, that model to come out, that's the color you want. You have to wait until after you go to closing. Don't destroy your debt ratio, okay? Underwriters do have something called undisclosed debt monitoring that is on until you go to closing. So if there's any flags that come up that new debt could have been opened, the underwriter will find out. And you don't want to find out days before closing that you no longer qualify. So please hold off on any new accounts. Homeowners insurance. So the online listings you're looking at, what I find is that the homeowners insurance that's listed when they provide you a summary of what monthly payment might look like, those quotes are often far less than what insurance actually costs these days. So if you're out there shopping, it would be good to connect with your insurance agent to get some quotes. A lot goes into that. Everything from the age of the house to how recently it was renovated, how that home was built. Is it brick? Is it stone? Is it a cedar shingled 3-story Victorian? Have you had any prior claims with insurance? That's all going to factor into how much your insurance costs, and you could be $1 away from not qualifying. So best to have a sense of what the insurance will cost as early as possible. When the loan is approved by the underwriter will issue an approval with conditions. And it's important that you supply these conditions, whether it's documentation or additional information, to your lender as soon as possible. The underwriter needs to review again. They may clear the condition. They might say, I need additional documentation. I need additional information. What the borrower provided was not sufficient. And look, the underwriter is not trying to make the process any more difficult than what it needs to be, but you have to understand lenders are required to comply with guidelines. And the guideline books are very, very thick. To give you some idea, the FHA guideline book is over 400 pages. A lot of T's to cross, a lot of I's to dot. So please pay attention to those emails your lender's sending to you. Here's what we need, and get that in as soon as possible. Title work is a big component of the transaction. The title company, or maybe the real estate law office, depending where you're buying. Here in Maryland, we have title companies. In, say, Delaware, there are law offices that handle the title portion. They will reach out, connect with you, ask you things like whether or not you want a survey and what type of owner's title insurance that you want. Do you want the standard policy? Do you want the enhanced or Eagle policy? There's different coverages, different costs. You definitely want to have owner's title insurance. It is optional, but like you're spending hundreds of thousands of dollars on this purchase. Protect your investment. Don't skimp on owner's title insurance. They will also provide you with wiring instructions. When you're buying a home, you often need tens of thousands of dollars to get to the closing table. You cannot write a personal check. And you'll have to go to the bank, take the wiring instructions with you. I would advise contacting the title company when you're at the bank, confirm you have all the correct information, confirm the dollar amount that's needed, and let them know the wires coming their way, because you can provide them with a confirmation number. You cannot do this on Saturday or Sunday. You cannot do this on bank holidays, so plan accordingly. I tell my clients to go at least a day ahead of the scheduled closing date. Prior to closing, there will be an initial closing disclosure sent out to you. That has to be signed at least 3 business days ahead of your closing. So again, monitor your communication, make sure you're signing documents promptly. Again, if you have questions, ask your loan originator. Last thing I'll leave you with is time, date, location for settlement. You have to make all parties aware of your schedule. You do have to show up in person, or at least a representative does if you have a power of attorney. Here's the thing, if you're gonna have a power of attorney, that document needs to be reviewed in advance of closing to make sure it complies with guidelines. So you have the ink signed documents. You do have to bring your ID, make sure it is valid ID, it's not expired. That people show up to closing and they forgot their driver's license expired. That's gonna be a problem. So if you follow all these tips, I'm confident you'll get through your transaction as stress-free as possible. If you have any questions, if you want to connect with me, click on that link tree in my bio or in the description below.